Hi, I'm Todd Rosenbluth, Head of ETF and Mutual Fund Research at CFRA. I'm excited for you to join us because I'm here with my colleague, Aniket Ullal, who used to run First Bridge ETF data business and is now running the data side of CFRA's business. Welcome, Aniket.
Thanks, Todd. Great to be here.
So we're going to cover a few different topics about the US market as well as the Canadian market. But Aniket, maybe you want to just set the stage about the data expansion that CFRA has done.
Sure, Todd. As you know, we're living in unusual times, but we've been quite busy. We've had US ETF data coverage for many years, almost 10 years now, and we've increasingly had requests from clients for increased global coverage. So Canada was kind of the natural expansion. So we recently announced an expansion of our data set to Canada, and we'll talk a little bit more about that. But we now have entire North America covered in terms of our ETF data.
That's great. So before we get to Canada, let's just focus on the US. The US ETF market has seen strong flows as well as strong launches. There's probably a couple of key themes that are happening within the launch world. Maybe actively managed ETFs and semi-transparent ETFs is a good place to start.
Sure. Like I said, we've been in unusual times, but it's been a very busy time for the ETF industry. We've actually had 130 launches in the first half of this year, which is pretty much on par with what we had the same period last year. And certainly, as you mentioned, semi-transparent ETFs has been a very important aspect of this. For those of us who track the ETF industry, we'd recall that almost a little over a year ago, the SEC approved Presidion's active share ETF product. And till that point, every ETF launched in the US, whether it was active or index linked, had to disclose its holdings every single day. And this new structure allows the fund manager to launch an ETF with only semi-transparent disclosure. In other words, holdings disclosure every month or every quarter. And so that's been a huge change in the industry. And we've already seen in the first half of this year, three active semi-transparent launches. The first two were from American Century. The tickers were FDG, which was a growth ETF, and FLV, a value ETF. And that is actually followed in May, by Legg Mason, who launched CFCV, a third semi-transparent ETF. So it's been an interesting time in the industry. Todd, I don't know if you have thoughts on it, but certainly it's going to be something to watch.
Yeah, and then we had Fidelity come in soon after that with their own suite. They've got three products that they launched as well: Fidelity Blue Chip Growth, Fidelity Blue Chip Value, and then a millennial-focused ETF. And I think there's going to be a lot of expansion. We're going to see more of these products in the second half of the year. And we'll see if there's demand, but there certainly is going to be more supply. The second theme I think that we want to touch on from a launch perspective is known as buffer ETFs. These are defined outcome products. Maybe you want to just touch on the number of launches we've seen there.
Sure. Again, I think this is a very interesting area for us to keep a tab on because this is a very unusual product structure. Just to give a quick overview, essentially the way these products work is they protect investors from downside risk. So if the tracked index falls or declines, typically the product protects investors from a certain percentage of that declines. Now that percentage may vary from about 9% to all the way up to 30%, depending on the specific product. To compensate for that, investors give up some upside. So they only get a capped upside. So essentially it's getting a capped upside with some limited downside. And it's a very interesting structure. It was initially launched by Innovator. We've now had other providers come in. And this year we've had 26 ETF launches, which are buffered or defined outcome ETFs, which is almost 20% of all the launches in the first half of this year. So it's definitely a product that's gotten a lot of interest.
So it started with Innovator. We've seen First Trust come in. We've seen a couple of other firms that are entering the ETF market. It's certainly a unique way of doing it. And so the launches, I think we're going to see continued launches in the second half of the year.
Absolutely. And I think, so we've seen the semi-transparent, we've seen the defined or buffered ETFs. And I think another interesting thing that's, to note is flows in this year. And Todd, I know you've been tracking some of that as part of your research.
Yeah, and again, it's using the great data that we have in-house that's known as First Bridge Data that we acquired last year when you came on board. We've had really strong flows, $200 billion plus at this point in mid-July of 2020, over 200 billion at the first half. A couple of key themes that have happened is we've seen strong inflows to fixed income. They're roughly 20% of the overall ETF asset base, and they're approaching 50% of the flows. They're actually crossed that once we hit July. The Federal Reserve is playing a role, but I think investors are just getting more comfortable with the liquidity, the price discovery, and the tactical nature, as well as targeted nature that you can get within fixed income products. The second theme within equities that we found interesting is that sector ETF demand was much stronger in the first half of the year. And not only healthcare and technology, which have been winners within the space, but also energy and utilities, which have been underperformers. You don't usually see investors chase products on the way down, but investors have been looking to use ETFs to be tactical. And I think those are two key themes to watch in the second half of the year, particularly as the market is likely to be more volatile, both in the equities and in the fixed income space. Anything you want to add from a flows perspective?
No, I think that captures it. I think between the combination of these new types of product structures coming in terms of semi-transparent, defined product benefit outcome products, as well as the flows data, I think we've had a lot of interesting trends in the first half of the year already.
So the U.S. is a much larger part of the ETF market, but the Canadian ETF market was actually first. The first ETF launched there. So it's exciting that we at CFRA are expanding our data, not our ratings yet, but our data coverage of Canadian ETFs. Do you want to just talk about what we've been doing in the last few months?
Sure. So in the US, we've had three types of ETF data sets for many years. The first is constituent holdings data, where we capture all the underlying holdings for every ETF. We have very granular reference or classifications data, which you can think of as a very, very detailed ETF product list. And then we have a whole range of stats, returns, flows, based both on price and NAV. And as I mentioned earlier, we've had a lot of requests to expand that to other markets. And so we recently announced an expansion of that data set to Canada. So we have all the three data sets, the holdings, classifications, and the stats now available for the Canadian market. And we're continuing to expand that data set over time, add to the history. And our hope is to continue expanding that outside North America as well.
So you and I partnered to do a research report about the Canadian ETF market. What are some of the key takeaways you think our listeners should be interested in about the growth of the ETF industry or the number of players in this space?
Well, as you mentioned, Canada has always been a pioneer in the ETF space. The world's very first ETF launched in Canada in 1990, and this is actually the 30th anniversary year of that launch. And since then, we've seen a lot of growth in the Canadian market. Right now, there's a little over $150 billion US dollars in Canadian ETFs. That's up from about 85 billion at the end of 2016. So that's very significant growth. The number of issuers has also increased from about 19 in 2016 year end to 39 currently. So it's a healthy growth. It's a growing market. A lot of the big issuers in Canada have taken part, and I think we continue to expect more launches and more asset growth for ETFs in Canada.
Yeah, I think it's interesting also some of the players that are here in the US that are also in Canada. Obviously, iShares is the global industry player, but there's Invesco, there's PIMCO, to name just a couple of the firms that are out there offering, and then of course local Canadian firms, Horizons, for example, that are obviously focused on that market.
Absolutely, and I know you've been doing some research, Todd, too, on Canada, and the market does look a little different than it does in the US.
It does. So they're actually ahead of us, in us being the United States, where I'm in New York at the moment. The Canadian ETF market is roughly a third of that is fixed income ETFs, again, versus that roughly 20% or 1 in 5 assets in the US. And within the equity side, naturally, there's Canadian focused ETFs, those that are invested in Canadian stocks, but also that are focused in US stocks. So you can replicate the S&P 500 index through products that are offered in Canada, not just have the TSX 60 and other Canadian indices. So again, it's a sign of the overall growth and expansion within the Canadian marketplace.
Absolutely. And I think, Todd, I'm sure you will agree from a data perspective, certainly it's been a very exciting time to track the ETF market in North America because, like we've discussed, the flows have gone into certain types of sectors and strategies. We've seen new types of product structures come out, both in terms of legal structures as well as strategies. And it's going to be interesting to see how the industry evolves. Despite COVID, I think it's been a very interesting time to be in the ETF space. And I'm sure you feel the same way from a research perspective.
Yeah, investors have been running towards ETFs as opposed to running away from them, that the fears have been out there during market volatility. ETFs globally are gaining traction and adoption as either a replacement for individual securities or mutual funds or a combination of those. So it's exciting. I'm glad that we at CFRA are helping lead the space in terms of ETF data and then ETF analytics on top of that. So Aniket, thanks for the time. I'm excited for our clients to learn more about our expanded Canadian data set.
Thanks, Todd. It's always fun to talk ETFs and look forward to doing this again.
Thanks.